Welcome everybody to Financial Freedom Classroom. We accelerate your results. We are Financial Freedom Classroom. I'm John Locke, owner of Locking Your Success LLC. We are an options trading and coaching company, an education company. I am also a master practitioner of neuro-linguistic programming as well as hypnosis. Sherry is on board with us as well, and together we've managed many successful businesses in the education, automotive, real estate, computer consulting and coaching business. We also are active real estate investors. We do spec home building, rehabs, rentals, stuff like that. And we also provide guidance and loans to small businesses that are worthy of such things. So moving forward, before we get going, we just want to make sure that you understand that this presentation is for general information only. It has been prepared without taking into account your personal financial objectives, situations, or needs. Therefore, before acting on anything that we talk about, please make sure that you check with the appropriate licensed professionals, because we are not licensed attorneys, accountants, or financial advisors, or tax preparers. So make sure you go ahead and do that. And with that, I'm going to turn this over to Sherry, and she'll tell you what we have going on for tonight.
Right, so tonight we have a guest with us who's going to talk how to save big tax money with a Section 105 plan. So this is, it's a great way to save thousands. So I'm going to introduce Gene Hamilton. He is the Regional Sales Director at Task in the Northeast region, and he's going to tell us how we can do that. So I'm going to grab his slide deck. Okay, so Gene, welcome.
Thanks, Sherry. Hello, everybody. My name is Gene Hamilton, and as you can see from this slide, I'm the Regional Director for Task. Task is a third-party administration company. What that means is we work with accountants and insurance people all over the country to help their small business clients utilize tax deductions or pre-tax vehicles for their small business clients' healthcare expenses. So tonight I'm specifically going to be talking about what we call BizPlan in the task world, but what BizPlan actually is a Section 105 health reimbursement arrangement. So Sherry, if you could move to the next slide. Thank you.
Sure.
So Section 105 is part of the IRS code, and it was put in into the IRS code in 1954 for small farming operations. Big businesses go out and hire all their employees, and in yesteryear they used to give them healthcare benefits or benefit packages that included free healthcare, and they didn't pay any taxes on those business expenses as they were deemed. And so the IRS put in Section 105 of the code to help family farming operations, because the spouses of those farming operations always helped out with the business, and so it was a great way of putting that spouse on the payroll and then being able to convert those expenses, premiums and out-of-pockets, into a benefit program for that spouse as an employee of that farm, and that spouse would cover the rest of the family. So they were able to level the playing field between what big businesses could do and what a small farm business could do. Section 105 also applies to Schedule C businesses and corporations, and we'll touch on that in just a bit. But our average client, as it says here on this slide, saves over $5,000 a year by utilizing this deduction, and we just did an average of our clients 2014 deductions, and our average BizPlan client saved over $5,300 in 2014 by utilizing this deduction. So,
sorry, I was just going to ask
Sure.
a quick question, Gene.
Sure.
Are you going to talk about the difference between using the health, because I know a lot of people are thinking that they can deduct their health care on Schedule A, which we know is the itemized, or I'm sorry, it's at the beginning of the form, as opposed to Schedule C, or?
Yep, I'm going to
Okay.
touch on that. I'm going to first talk about who it works for. So
Okay.
if you go to the next slide, we'll talk about the entities that it will work for. So as Sherry mentioned, it works very well for sole proprietors. Those Schedule C filers, Schedule F filers, partnerships it does work for, but it doesn't work for husband and wife partnerships that are partners together. It works for if there are two brothers or a father and son or two friends, just because Section 105 needs to have employable interest. So what you're doing is putting the spouse on as an employee and then converting the family's health care expenses into a benefit program for that spouse as an employee. So works with partnerships, works with single-member C corporations, nonprofits as in churches and things, limited liability corporations, depending upon how they file under that LLC, and S corporations, remembering that single-member S corporations can utilize a 105 plan, but their savings is significantly less just because of the things they can do to cut through all the chaos of an S corporation. What it really does for the S corporation, it's going to save the FICA tax on the out-of-pocket expenses. So Sherry, if you could move to the next slide, that's where I'll get into the nuts and bolts. So as I said before, to utilize a 105 deduction, business owners hire their spouse. Now, there have been changes because of the ACA, or healthcare reform, that affected this this 105 deduction. It used to be able, to include if a small family business hired the spouse and then there was a hired employee that they wanted to extend that same benefit to, they could. But the changes for the ACA have made this that in the language of the IRS, they said that this is now a legitimate deduction for less than 2 employees. So 1 employee, so you hire that spouse, classic intention of the deduction is still very legitimate. So corporations don't need to hire a spouse because they're already a W-2, but Schedule C businesses will hire their spouse for a small W-2 wage, and by doing that, they're able to convert the family's premiums and out-of-pockets into a benefit program for that spouse as an employee. So what Sherry had mentioned earlier, a lot of people think that they can do this, that they're fully deducting all of their health care expenses. And what actually happens is that they're deducting the premiums on the front page of the 1040, and they're receiving a federal tax deduction. But they're missing out on the FICA tax savings and sometimes the state tax savings on those premiums. And on the Schedule A, where the out-of-pockets go, there is the 10% AGI rule, or adjusted gross income rule. So most everybody doesn't qualify for anything but the standard deduction on their Schedule A expenses. So by hiring the spouse, what you're doing in essence is moving those expenses, premiums from the front page of the 1040 and out-of-pockets from the Schedule A, you're moving those to the benefit line on the profit and loss statement where they're tax-free. So you're saving federal, state, and FICA on all of those. So that's where the extra tax saving is derived from a 105 deduction. So Sherry, if you could move to the next slide.
Actually, before we go, Gene, there is a
Sure.
question. Will it work with a disregarded entity LLC? Have you heard of that term
You know,
before?
I've never been asked that before, and so I don't know how to answer it, quite honestly. But if you want, Sherry, what I can do is I'll certainly get the answer and get it back to you.
Okay.
Yeah, bright and early in the morning. A
Okay.
disregarded entity. Most LLCs, if they file as a sole proprietor or a partnership or a C corp or an S corp, that's how that'll be the determining factor in how effective a 105 deduction will be.
Okay. Well, thank you for going over that, because I think that's a big issue where that people say, well, I'm deducting it on the Schedule C, so isn't that enough? But it really isn't, because you really don't get to do, you really a lot of times don't get to deduct anything, because it's subject to that 10% adjusted gross. So so thank you for going over that.
Sure. And let's on the next slide, I was going to touch a base on why you need to use a third-party administrator, light tasks, do that sort of thing. So Sherry, if you move to the next slide, that would be great.
I think I'm on it. Actually, Andrew came back and he said, disregarded entity doesn't file its own tax return. Everything passes to the single member's tax return.
Right, which is most LLCs are probably like that.
So I don't know. I mean, I'm not not tax savvy about that, but I believe it will be.
It passes through to their, so if they're filing as a Schedule C, then that's it. That's what it goes. That's the determining factor of. So yes, it can. Most LLCs can use this. Okay.
Yeah.
So,
thank you.
But again, just remember that there are with an S corp, an LLC that files as an S corp under that LLC, their tax savings in a 105 situation, just because of all the complications with an S corp. I'm just trying to give you what's really going to make the difference. Is going to be they're going to save the FICA tax 15.3 on the out-of-pocket expenses. So the tax effect isn't as great. So when I talked to an S corp about utilizing a 105 deduction, I want to make sure that they understand that the tax savings is going to be less for them, but then we're going to talk about, okay, what are your out-of-pocket expenses? Most normally it's going to have a better effect or a greater tax saving value for them when they're experiencing $7,000, $8,000, or $9,000 in out-of-pocket expenses. I tell people, because we charge an administration fee every year, and so the break-even point in an S corp situation is when you have around $3,000 in out-of-pocket expenses. That's when you've saved enough that it's paid for that administration fee, and then everything over that certain amount is you're starting to save money with a 105 in place.
Mm-hmm.
And I just like to tell it like it is.
No, that's honesty. Your company's been very honest with us, so I appreciate that.
So thank you for moving to the slide. One thing I need to tell you is that a third-party administrator, what they'll do to administer the deduction properly, because people wonder, well, why isn't my tax person doing this for me? Well, one of the reasons is they have to set up a plan document. The IRS requires the plan document to be put in place. So a third-party administrator will put that plan document in place, and they'll also update it every year that the IRS requires that it be updated every year. And then an administrator will give you the abilities to keep track of all those expenses. So what you need to do is you need to hire your spouse, and you need to reimburse your spouse for those expenses. So a lot of people, when I talk to people about utilizing the deduction, if I'm sitting at their office or their kitchen table, I'll ask them, how do they file as a business? how many employees they have, does the spouse help out with the business. If they qualify for the deduction, to utilize the deduction, then I'll ask them about their expenses, what they pay in premiums, what they pay in out-of-pocket, so I can give them a quick idea of what type of tax savings they could realize. And I might tell them, if it was true to the averages, I might tell them, you should save around $5,000 in extra taxes by utilizing this deduction. And they'll say, well, that sounds great, but it also sounds complicated. Well, then I tell them, okay, this is what you do. Right now, you're probably paying those expenses out of the business account. So what you're going to do is now you're going to write your spouse a wage check out of the business account. You're going to cash it into the personal account. You're going to pay those premiums and out-of-pockets out of the personal account, and then the business account is going to reimburse the personal account. And that's the cycle of reimbursement that the IRS wants to see to know that it's a legitimate health reimbursement arrangement for Section 105 deduction. And so people like us, we put that paperwork in place, and we also give you the abilities to make those reimbursements easy. So we issue debit cards for the business owner and the spouse. Those are merchant-coded debit cards. They're smart cards. So you would walk into, and we call them task cards. And so we issue those for the biz plan clients. And so if they have to go into the doctor's office and pay a co-pay for $30, or they have to go to the pharmacy and pay a prescription of $25, they can swipe those cards. We preload those cards with $1,000 of tax money, and so when they go to Walgreens to swipe for a $25 prescription, they could grab a bottle of Coke on the way up to the pharmacy counter and try to buy the prescription and the Coke at the same time. Once they swipe that card, the card recognizes eligible expenses, so it would pay for that prescription, but it wouldn't pay for the bottle of Coke. So now Task has paid for that prescription expense, that eligible expense of $25. We send the business an email saying, okay, this eligible expense was incurred at Walgreens for $25. Now we're going to ACH it out of your business account and pay that expense. So more or less electronically reimbursing for that expense. That preloads the online ledger of the biz plan deduction so that at the end of the year, we send the biz plan client form. Everything the business owner and the spouse have used those task cards on, all those expenses are pre-filled in. So you don't have to save a box full of receipts. All those expenses are pre-filled in. Then they fill out who they paid their premiums to, what carrier, and then they send it back to us. We put it in the proper paperwork and send it back to the client. That's what they take into their tax preparer as their biz plan paperwork. So we've been doing this a long time. We tied it up into a nice, neat little package. So that's one of the reasons why people need to use an administrator to use this type of deduction, because there's more to it than just having your accountant do it. They would have to charge you a considerable amount to be able to do that sort of thing.
Right, and I understand it is required that you have a third party do it, so, right?
Yes.
Yeah.
Yep, especially nowadays with all the ACA changes, plan documents are very important at this point. Okay, so can we move to the next one?
Sure can. There you go.
Thanks very much.
Sure.
Okay. So again, we put the plan document in place. We also put an audit guarantee on everything we do with the biz plan, so that if the business is audited about that biz plan, we will stand up for that in an audit. And if it goes to court, we'll stand up. We'll stand up for it legally. We've been to courts on audits. We've been to DOL audits. We have experience in this. We've been in business for 35 years. So typically, if there's an audit situation, we prepare a summary plan description, which is really kind of the golden goose. Those summary plan descriptions, when handed to an auditor, they look at them and they know that those those deductions have been handled appropriately, and that's usually when the auditor says, yes, this is a very valid deduction. You've been utilizing it. You've used it in the right way, so thank you. So that's part of what we do, and we also keep up on all the changes that are coming out of Washington, D.C. all the time. So every notice that affects how healthcare expenses can be deducted, we keep an eye on those through our legislative and legal staff, and we make sure that we look earnestly at every notice that comes out to see how it affects what we do, because we're in the business of saving our small business clients tax dollars. So, and I was wondering if there are any questions about what else we do.
Well, while we're waiting for people to type in, how about if I ask a question? Should I
Sure.
pop to the next? You wanted me to go to the last slide?
And that's fine.
Okay. So one of the things I think I was talking about was if the doctor, there's various things that can be given as a deduction. So for instance, if the doctor recommends that you get allergy medication, say, and it doesn't have to be a prescription, that could be deductible, right? Or that could be included.
Yeah, and we include, what we do is when I sit down at somebody's kitchen table and talk to them about utilizing the deduction, and then we move forward and fill out paperwork, I advise them about what's going to happen. There's going to be a certain flow of things to happen. Once we get them signed up, they're going to receive a packet in the mail that's going to be some extensive information about what they're doing and the deduction that they're going to utilize. And then we supply a list of eligible expenses. One of the changes that has happened through healthcare reform is that some things that used to be deductible are now, like as you mentioned, Sherry, over the counter. Your doctor might want you to take vitamin C or want you to take an aspirin every day. So in those instances where those over-the-counter expenses used to be deductible, now there's a smaller list of those things that are deductible. But in those instances where if they're telling you to get chiropractic work done, if they're telling you to take vitamin C or something like that, all you have to do is get a note of medical necessity, and then that makes that expense an eligible expense in the eyes of this deduction.
And I'm also wondering about, say like a Y membership could be also if you need to take yoga or swim or one of those things for medical purpose.
Yeah, certainly if there's some rehab work to be done, and you have to do it through a facility like that, all you have to do is get a note from the doctor.
Right, so.
And that note is just a note of medical necessity.
Okay, so that sounds great. John, do you have any questions or thoughts? John?
I don't have anything at this second, other than it's take advantage of every tax advantage you can get, because the Lord knows we pay enough of them. So you want to make sure to do it properly.
Right.
No doubt about it. I have recently been communicating with small business administrations, because we're seeing that a lot of new businesses, as you folks certainly well know, one of the first things that a financial advisor will tell you is try to get your tax obligation down. And this is really one, with all the craziness of the ACA, this is one of the best deductions that still is standing and will be, because we hope that the government understands that small businesses are very important to everything that goes on, and that this is a very good deduction for them to use to keep the healthcare taxes down.
Right. Yeah, I agree. I think, I mean, I was just, looking at the taxes and so forth, and we wouldn't be able to deduct anything on Schedule A, where we're definitely going to be able to, with this Section 105, we'll definitely be able to keep, that 5,000 plus, and then, I mean, we could use that to, I don't know, put in a Roth IRA or something instead of paying it out. So it's definitely a great thing.
No doubt about it, because the people that we put into a 105 deduction end up staying in that deduction for 9.5 years. It's one of those things, along with average savings per year, we calculate how long people stay on the deduction, and it's 9.5 years. And so when people start utilizing the deduction, they like to see that tax money being saved every year. And we would think it would maybe even be longer, but naturally businesses are handed over to the next generation, or people retire, or people sell their businesses. So that says a lot about the value of the deductions. People stay on it. And when you think about it, if you're saving $5,000 a year and you stay on it for 10 years, that could be a couple years of college for the kids. So.
Yeah, no, it's definitely a great thing. Actually, we had a question pop in. So let's see, for a C or an S corporation, for example, husband, wife, son, would you recommend the biz plan now when only the son needs the medical insurance?
Well, if now, are they all employees?
Let's see, if it's a
Well, let me just expound. Let me just expound on it. In a 105 situation, we have to remember with the ACA changes that it can only be used for one employee, one qualifying employee. But it allows us to set up eligibility requirements. So if that spouse works at the business, and if the son works at the business, that's fine. But what we do is you eliminate them from eligibility. You could either do that by the number of hours they worked, by the amount of time they have worked for the business. Section 105 allows us to set up a sliding but pretty specific eligibility requirements because really what we're doing is we're looking to make sure that one employee is eligible, and then the rest of the family is going to be covered by that employee that's using the employee benefit.
Right. It looks like it's the son is the only one that needs medical insurance, so he would be the one that would be an employee and be the one who needs the insurance. So sounds like it would work.
For a family situation, we certainly have the answer to, because a byproduct of the Affordable Care Act has been something that we're calling the no limit plan, which is more or less a self-insured healthcare plan that works for companies with family employees. Mm-hmm. So again, that's something that we look at, and we do it on a company-by-company basis to make sure they're qualified. Because we put an audit guarantee on everything we do, we have to make sure it's ACA compliant. Right. So in that situation, I'm sure we're going to have the right answer.
Right. That's great. Well, I think he said thank you, so that's excellent. So thank you, Gene. We've.
Oh, you're very welcome. I appreciate it, and people can reach out to me directly. my cell phone is there and my email address, and I keep my phone on all the time, much to the chagrin of my wife. But I also I'm very prompt about following up. So if anybody reaches out to me and they mention your class, Sherry, I'm happy to get with them quickly and see if we can help them out.
That'd be great. Well, thank you so much, Gene. I appreciate you spending the time and coming to talk with us, and I appreciate it. I'm sure you'll be hearing from some of our folks.
I hope so. Listen, thanks very much again to you guys, and look forward to talking to anybody sometime soon.
Thanks.
That was great. Thank you very much.
Thank you.
Okay, you're very welcome. Bye-bye.
So before we sign off, you can join us again at our blog and at Facebook, and you can always send your questions in to Sherry@financialfreedomclassroom.com, and please share this information with your family and friends because maybe they can benefit from that. And next month we're going to talk about how to be nice to your holiday budget. So we're going to talk about ways to save money and not be naughty. So, and we have plenty of tips about that, so that'll be a great time. So we appreciate everybody being with us, and have a great night, everybody.
See you next month.
Take care.